Hey, what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody live over on YouTube, over on X. As always, this will be recorded if you got to jump out of this, and you can catch the replay over on YouTube. Yeah, we'll be going over everything that went on in the overall market. Get ready, everybody ready to trade for next week. So without further ado, it's time for the Rapid Review. All right. As always, you guys know the deal. Read through the disclaimer. Educational, informational purposes only, not financial or investment or trading advice. All right. Let's get started in the somewhat new, released last week, new dashboard that I got created. So we'll start off with the trend overview. For my stance, I have us in a downtrend. I have my exposure levels at 0 to 20%. Then we jump over to the Webby trend or the Mike Webster 3-day trend. He has a video on that. I'll actually, if anybody wants to see that, I'll post that over on X so you can check that out. But he has the S&P now in a downtrend and the NASDAQ now in a choppy phase. So I was able to put that kind of indicator automated into this dashboard, and that's what's spitting out the downtrend over here and the choppy over here with his rules. And then I have my own custom 50-day kind of trend, moving average trend, and you can see those are both signaling in a downtrend. Looking at where we are from all-time highs, the S&P down 5.29%, NASDAQ down 7.97%. Looking at the rally, and we'll talk a little bit more about this when we kind of get into the charts. But the NASDAQ is going to be on day 6 of the rally, starting on Monday. So still primed up for a follow-through day, possibility to get a signal to start testing the market. But the S&P did drop off and break below the rally day. That was also on 3/9, and that caused us to deactivate the rally attempt on Friday. And now we just need to keep an eye out and see when that next rally attempt starts and then start going from there. Index performance. So you have the S&P for the week was down 1.6%. NASDAQ was down 1.26%. Dow down 1.99%. And then the Russell 2000 down 1.79%. All of them closing, bare bottom lows, 3%, single digit percentages in terms of the closing range. So really closing near the lows for the week to finish out the week. And that leaves us with the S&P down 4.30%, NASDAQ down 6.31%, the Dow down 4.42%, Russell down 2.14%. So, yeah, if you are flat green, you're beating the market. So congratulations. But yeah, obviously not a good year so far for the market. First 2 full months really in the books, and starting to go into the third, and things just not looking great. Morning, Chad. Morning, Sag. Appreciate everybody jumping in the chat. You guys know the deal, though. If you got questions, comments, anything you want, just drop it. All right. Moving averages. So you can see really not much changing on the moving averages on the 10, the 21, the 50. They've all been below, and they finished also last week below those moving averages, and they're still below those moving averages as of right now. The big major change was the NASDAQ breaking below the 200 simple moving average. That is where people argue that's the institutional moving average. That's the longer term moving average. Starting to live below that is a very, very negative sign. It normally triggers us into a downtrend. So yeah, breaking below that for the first time in a very long time is definitely something to take note of. All right, looking at distribution days. So we have the weekly distribution day in the up top. You can see the active days, 8 on the S&P, 6 on the NASDAQ. If you come down here in this little summary area, we'll take a look. It was a net -2 change on both of those. So you can see we had 6 now. We had 8 last week on the NASDAQ. We had 10 last week, and we have 8 now in the NASDAQ. In the S&P. What happened this week was we gained distribution on Thursday on both indexes. For those who do read my articles that I post throughout the week, this is a correction. So one of the things you'll notice with the indexes is the volume can be very different from various sources. The main source that I use was showing just ever so slightly below the prior day's volume. So this not being a distribution day. A couple other sources I checked showed it just above. So with more sources and showing that it was above, we then switched over and I added that distribution day. Doesn't make much of a difference overall in terms of the outlook, but just something I want to bring some attention to. But yeah, added one distribution day on both indexes. We lost the same 3 distribution days on both indexes, the 130, 23, and 24. All those due to time, 25 trading days, dropping those off. So we were able to, like I said, end up with a net negative 2 change on the distribution days. But as you guys can still see, I mean, it's still a lot of distribution in the market. Not as important as we're in the downtrend, but just something I still like to keep track of because I don't see any harm in it. If you get a follow through day, you still got to follow through with putting some money to work, and you can't allow the distribution days to affect you, but still something I like to keep track of. Next week's forecast, we got the 210 distribution day is going to be dropping off on both indexes, which will be due to time. And then the S&P is also going to drop off the 212 distribution day due to time. So, yeah, we'll see that further dropping, how many are in there, but we'll see what happens. All right. There you guys have just like a quick visual of the distribution days that have been set up in the market. And especially in the last 3 weeks, starting to see these days kind of build up. Yeah, especially the last week and the week before that, not this current week that we're finishing out. You know, we ended up having 5 distribution days in just a 2-week span. So, yep, not a good sign. Events going into next week, definitely the big day, Wednesday. The FOMC meeting tends to bring a lot of volatility to the market. So if you do have positions, just kind of be aware of that. Or if you're placing positions like in the early morning, just be aware that a lot of times following up that meeting, there's a ton of volatility in the market. Something I like to pay attention to. And then we're going to have triple witching coming in on Friday the 20th. Which is just expiration of futures options. Actually, I forget triple witching what it is, but exactly options, contracts, things like that. So just noticing that I put it in there because that sometimes brings abnormal volume showing up in the market, and I take note of that. And earnings. All right, so earnings, you can see what we got on the screen. Micron, probably the biggest one that I think on Wednesday after market close that I really want to see how that market reacts to. It is one of those stocks I've been watching very, very closely. It's one of those stocks showing a lot of relative strength. So for me, that's the biggest one that kind of stands out there that I really want to keep an eye and just see how the market reacts to the earnings report. Other than that, let's jump over. Let's take a look at where are we starting? Thinking, yep, okay. We're on the daily on the NASDAQ. So when you kind of zoom out, right, you can see we have this big uptrend, sideways action. We were kind of wedging higher towards those all-time highs, and then we started to reject off of those highs, and now we're starting to roll over. We still haven't broke the low of November 21st. But we have, if you look in here, if we look at this 1, 2, 3 lows, we have broke 2 of those lows. So once we started to see that we were making lower lows and now lower highs as well, that's a lot of where I have to start, paying attention and thinking about, could this market be starting to either end into a choppy phase or go and start to roll over? We really chopped around a lot if you really look at this since like the end of October. And that's kind of led us now where we're starting to live below these moving averages and just keep trending downwards. Like I had mentioned, that break of the 200 tells us a lot of where we're at in terms of the overall trend of the market, but we've been really living below the 50-day. The 10 and the 21, really steep downtrend. We've tried many, many times to just get above those moving averages and just constantly, specifically the 21, we just constantly get rejected over and over and over and over again. I think, what do we have? We have one. Yeah, since probably, what is this? Since the beginning of February, we've had one close above the 21 EMA. That tells you a lot about where we are in the trend. And 21 really a big signal for me in terms of my timeline for trading. Um, Throughout the week, though, now that we're just kind of giving an overall idea of where we're looking at with the market, um, we had on Monday was just a super volatile day. We basically kind of gapped down to start off the day. Then we kind of quickly rallied up and we met clear resistance at the 10. Then we had another volatile day on Tuesday as we tried to rally up and then we got rejected. Then we saw on Wednesday, same thing, tried to rally up, got rejected. And for those who follow me a little more closely, this is when I put a small, quick SQQQ position on for the rejection. You can see on the QQQs, this happened at the 50-day simple moving average and some other areas, but we also saw it happening clearly right here on the lows of January 20th. So we saw it kind of come into that area. We saw it intraday, it was getting rejected right off of it the minute it came within contact. And then from there, as expected, once we got rejected from this area, because you could see there's a lot of attempts to get up through that level minus this one day, and just even that one day we can't stay above it. We just keep getting rejected, keep getting rejected, keep getting rejected. So seeing us get rejected during the day on Wednesday, the follow-up was somewhat expected to see us kind of break down. And same kind of pattern, right? We reject, we go a little lower. We go up, we reject, we go a little lower. We go up, we reject. And this time we kind of met right at that prior low. And that's what kept that rally day intact. So really what it is now is just continuing to keep an eye on where we're at, if we're going to hold this rally and look for a follow through day, or if we're going to roll over and kind of reverse course and start looking for a rally day. And then when we get that, start looking for a follow through day. That to me right now, and the way the market is acting is the main way that I'm approaching everything day to day, because I think it's very clear to most we are trending downwards. There is, at the very least, you can label it a choppy market, if not a downtrending market. And until we start to see that signal that there is substantial institutional buying coming into the market, there is no reason in my eyes to be playing a game where the odds are against you. Yes, there are some leading sectors, but in the reality of it, majority of these stocks are going to move with the trend of the overall market. We're seeing this across the board. We're seeing it in the S&P. We're seeing it in the Dow. We're seeing it in the Russell. Everything is in that kind of downward sloping motion. So yeah, there might be some pockets, and specifically energy, that are looking good. Especially specifically oil, that you might want to take trades, but to me, I don't need to trade in every market. And that's where I think a lot of people make huge mistakes. If you look at some top traders, that's a lot of however they trade as well. You don't trade every market. You trade when the odds are in your favor. And right now, unless you're going to the short side, it's going to be an uphill battle trying to buy stocks and going long in this type of market. Yes, a lot of them you may get like some short, quick pops and maybe work out. And if you're a real quick swing trader, it might help out. But overall, when the trend is like this, the choppy fashion that we're dealing with, it's probably best to just be sitting out and being patient. On the downside, the big levels right now are going to be the rally day low. We'll keep an eye on that. And then the November 21st low. So those two levels, I think, are the most important on the downside. On the upside, really looking at that 120 kind of low, creating that resistance area for the NASDAQ, as we can clearly see, and as well as just the moving averages. I think right now it's really most important to be looking at the 21 EMA, but obviously the 50 is also very important, and they all kind of play their own role in everything. Yeah, so that's kind of the upside and the downside of both of those. I'll bring up the weekly just to do it, but yeah, to me, you can really kind of see, right, this big uptrend, the choppiness, the tightening, and then just instant rejection right off there. So very, very clear on the weekly. And then now that we're below that 40-week moving average, not a good sign. With the S&P, we'll look at it quickly, but you're really seeing kind of the same thing, same real similar action, even intra-week. Yeah, not much more to say, except that we broke below the rally day low, which on did the rally attempt, and now we're going to be waiting to see if we can find another one of those rally days. And then you also have the 200 right there as well. So we're pulling into that 200, but haven't broke it like we did on the NASDAQ. So ironically, I guess you could say, the S&P broke the rally day, but is above the 200, and the NASDAQ held the rally day, but is below the 200. So you kind of negatives and positives on both ends of those. All right. Don't see any questions on the charts. So let's go and jump over to Deepvue. For those who don't know, I'm a Deepvue partner. This is the tool that I use for all my stock screening, chart analysis, industry group analysis, basically thing I do use for everything. I'm a top-down type trader. I like to look at what's going on from the overall market, moving into the sectors, and then looking into the industries. The bottom here, we have our spider sectors. Let's just see from a weekly perspective, weekly RS, what we're doing. We got a daily over here, weekly over here, so you guys can get kind of idea what we're looking at with this trend. No surprise here, though, that energy sector, man, it just continues to rip and rip and rip. Even prior to what's been going on in, global war and everything, you have this uptrend's been going on for a long time, since like the end of the year. There was all different sorts of energy sectors that have been performing well, not just oil. So you can kind of see that even here, 12, 6, 3, 1 month, 1 week, and 1 day. It's like you're over 85 across the board, showing there's just strengths on all levels, real strong sustained uptrend. Utilities continues to show strength as well, not as strong as we were getting with the energy sector, but needless to say, still one of the leading sectors. Now we start getting into some of these groups, and I definitely want to talk about the overall trends with these groups, because there were pockets of days where technology was showing relative strength above everything else. It was popping, and it was like, wow, look at this strong move while everything else isn't doing very well. And I think it causes a lot of people to pay attention to technology, or see like these quick moves, or a couple names that are starting to perform well and get excited. But when you look at this overall trend, the same way I'm looking at what's going on in the overall market, these pops are like rallies into like clear resistance areas, right? We're like rallying into that 50-day simple moving average, getting rejected. We have started to, kind of flatten a little bit overall, I would say, when you're looking at the daily. But then you kind of look at the weekly and you're like, I mean, this is pretty much a downtrend, right? We broke below the 200. Like, this is one of those things where it's like patience is going to be your best friend. Don't fight the trend. Technology is not looking that great. Pay attention to the names that are looking good, maybe are holding RS, but I'm not looking to buy in a group when the entire sector is spider is below 200 and performing the way it's performing. I mean, you can look at it even 12-month 67, because we're still holding on to some of the strength from last year, but you look at 6, 3, every single one of these except for this week were below 50, below 30. So it's just, it hasn't been performing well, and the chart explains a lot of that. Here you got consumer staples, was really showing some strength. Then kind of now is pulled down into the 50, looking like it wants to kind of correct, but nothing to really say there. Same thing with materials, was showing a lot of strength the last couple of weeks, starting to weaken up. Real estate, nothing really much to say about there. Healthcare was one of those that was moving sideways. It was looking like it was going to break higher recently, and then the last couple of weeks has really started to fall apart. Communications, this group definitely showing good amount of relative strength overall, I think, and like kind of what I'm seeing on a daily basis, but also again breaking below that 50. So it's like still not looking that great. And there we have just kind of walking through these, obviously looking really horrible. So, we're starting to see, aside from energy, really like everything across the board starting to show some broad level weakness. I mean, I guess maybe you can argue, utilities as well. But everything else really showing some pretty broad-based weakness in terms of the trends of these industries. And you can see that when you compare NASDAQ, the S&P, the Dow, everything kind of rolling over. So I like that, though. I like a more broad-based market move. It's a lot easier than seeing these like pocket areas of strength, or this doing well. Like even in a couple of weeks ago, like the S&P looking like it wants to outperform and the Nasdaq looking like it wants to crumble. Like those type of markets, it's just not as easy. So seeing everything roll over together would be a good thing. And then as that rolling over happens, and as we start to, or if it happens, guess you know where my mind is at. And if we go into a sustained downtrend and correction, you'll start to see some of these groups begin to show some relative strength as the market starts to want to bottom, and that'll be kind of directing us to where we want to go. Theme tracker over here. We got 1 week, 1 month, 3 month, year to date. Not a ton, like you can see on the week, like cybersecurity's definitely been popping up a lot on these lists. Solar's here or there, China internet here or there. Really, I think looking at all of this, right? Obviously, we have the oil and gas. That's the clear one name that I think everybody knows is showing relative strength. But aside from that, the things that have just been popping up daily and that kind of keep showing up that I've just started to turn my kind of eye a little bit towards is that cybersecurity and telecom area. And occasionally you're starting to see what you can see over here on the 3 months, like semis. So this area right here is, I guess, where we've done some where we've had some relative strength over the last 3 months. But to me, I think the standouts for most of us to just kind of keep an eye on is like telecommunications, cybersecurity, and kind of the energy sector. All right. That is all I got. Not much more else to say in terms of what's going on with the sectors, industries. So exposure levels, you guys know what I'm talking about. 0 to 20%. If you're somebody maybe a little more longer term position trader, maybe there's some names that you got in that are holding up well that you're holding core positions for. But regardless of the style, whether you're longer term position, shorter term swing, even the longer term people, I don't think most of you are going to want to be over 40% corrected until things start kind of shaping up. This is the type of market where, you hold your core positions in some of your best names that are holding up well, that you're looking for these longer term, more bigger moves because you think it's a real true market leader. Aside from that, cash seems to be the best option, in my opinion, based on everything that I'm looking at, everything that I've talked about here. Definitely new buys. If like I am taking new buys, it's because of a follow through day and it is a small test on the market. It is not a full on dive in like, okay, got a follow through day. I'm jumping in 100% invested, 80% invested. I'm talking like 20, 40% invested, like is what I would do if we do get a follow through day. The reason being is follow through days fail. We've already seen one follow through day fail in this market, and it happens a lot. And it's not about being right. It's just about giving yourself a signal that has a high probability of working out and then kind of testing the market and allowing it to pull you in. The beauty of it is it works. Like, I have never in the last 8 years missed the market turning around because we got a follow through day. And more often than not, when everybody else is super, super bearish, we get a follow through day. It works out. And normally the stocks that tend to break out within that first week tend to be the big leaders for that year. So there's a reason why we do everything. If you don't fully understand the whole follow through day, rally day concept, distribution days, all of that, highly suggest reading How to Make Money in Stocks. Highly suggest doing some research on it. But it's the core of how I look at the overall market and the core of just my exposure levels and how I trade. So yeah, right now it's sitting, it's being patient, it's looking for relative strength, and yeah, just relaxing. Look, I did take that SQQQQ's position, and it was just a quick trade off a clear resistance level with like super, super tight stop because of where it got rejected, and just a quick kind of trade to, put a little bump in my equity. And if it didn't work that, it was like a negligible kind of effect on it. So, all right, we got some stuff in here. By the way, you're also beating the market year to date if you are cash too, since the market is negative year to date. Yeah. Yep. That's what, I don't know if you caught that in the beginning. I said, if you are flat, which basically means you just did nothing this year, or you are, even if you're just up a little bit, you're beating the market. So for I know a lot of people, because especially here in Discord, I can sense some people starting to get a little frustrated with maybe how this year started. Just remember, like if you are just flat and not red, you are beating the overall market, and to me, that's the bare minimum as a trader, right? I want to beat the overall market because otherwise, I'm probably better off just dumping my money into the some index fund or mutual fund, things like that. So but yeah, great. Again, glad that was brought up because it definitely something people need to remind themselves of and recenter their thought process sometimes because everybody wants to be making a ton of money in some markets. It's like hey, just being up a few percent is success when the market's giving you a poor environment. What else? What else do I got on my end? I think that's really it in terms of exposure levels. It's kind of a little bit of a repeat of what I've been saying over these last couple of weeks. But unfortunately, that's just part of the process. Like I'm not here to try to make a nice, entertaining, Kramer style show. I'm here to just kind of show you guys what I'm looking at, share my thought process and my weekend analysis, and what I think is the best moves to do going into next week. So, all right. Let's jump back over to Deepvue. Nobody's really, and I'm not surprised, obviously, nobody's really shared any stocks or anything that they want really looked at. I'm just going to show you what my 4 stocks I got on my spot list. I think most people have these on their list, but regardless, let's just show them, and I'll explain why. Why? Relative strength. These names are showing a ton of relative strength, and just like think about this: SanDisk is above all its moving averages. It is. That can't be right. Is that right? Let's double check this. Okay, yeah, it is 8.74% off its all-time highs, and up for the year. So this, especially here, taking a look back on the weekly, like this does not look like a stock that's been living in the market that we're trading in right now, right? This has been holding up fairly well. If you are somebody that wants to look at like holding from peak to trough, like we've got that classic kind of style CANSLIM base correction. We're around that like 30% range. It's been moving sideways. We're starting to get where we're now 1, 2, 3, 4, 5, 6, 6 weeks in that sideways action. Not like a traditional base, like you would think like a pure cup with a handle, but like it's just, this thing really just doesn't want to roll over. It just continues to fight the market. You just don't see a ton of down volume. It's starting to dry up in terms of volume as it's riding this way. Like this is just doesn't get much more clear of relative strength in my eyes than this does. MU, like perfect double bottom. Like this just looks like that perfect kind of double bottom base. Even a little shallow, which is fine. It just might maybe need a little more time from the left to right, maybe a little bit more time to work itself out because maybe it didn't flush out as many people in the correction. But I mean, MU, we'll see what happens with earnings happening next week. But again, just this like classic double bottom kind of pattern, just refusing to go below that 50-day simple moving average and being above all those moving averages. Another name that I think is just an absolute clear leader right now in the market and something worth paying attention to. Clicked off. DigitalOcean. Another one like this is a little more of a volatile name. You're talking about almost a 9% ATR on this name, so definitely a little more volatile. It has that 30-ish% correction off of the highs that came back from the beginning of February when things really, I think that, yeah, it's probably about mid-February things really started to get clear. But yeah, look, that's just another like correction right back above the 50. And now we're starting to tighten up, hopefully around those all-time highs. And again, there you have the weekly, like that just doesn't look intimidating at all. And then this, we have clear, secure. This is a name I've been watching for so long just because of what they do. And I just think it's a company that's probably going to get a lot of interest. So I've just been monitoring it and haven't traded it ever. But this was beautiful, right? This kind of weekly We broke through this big long-term consolidation on earnings, super, super high volume, massive, massive up week. And this is what I love right here is this flagging that we're getting right here. That we broke out, and then now we're kind of hopefully basing out. We're here, we're trending down to the downside, so the kind of latecomers are starting to go into the negative over here. Hopefully flush out some of those weak hands, hopefully tighten up, and then give us a nice risk reward entry off of a flag, off of secure, or even it could just be basing. Like this could just give us a more traditional base after that gap up. But just the fact that we gapped up, we held those gaps. So far, we've held that gap low. We got above into that all-time high range, and this has been showing a ton of relative strength. So this is another one of those names I've been watching. All right, these are the leaders. Tracking as of today, this is from SAG, but that could change once we start having positive index, Sandix, MU. I'll type these in real quick. AXTI. Yep, definitely super strong leader. And we kind of talked about this last week, and I think Seg might have been the person who brought this up. Western Digital. So this entire division or this industry has been doing good. That like storage has been doing good. So, and then here you have another one, Seagate, right? Light. So that's been doing very, very well. And honestly, I don't know why I don't have this on. I have that on my other list. That should really be on my spotlight list because this is another one of those that's just been a name that's been constantly performing very, 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 very well and now starting to base with the market and refusing to sell off like everything else is. There you got another one. Sienna. Teradyne. Yep. I would say that one as well. Not as high on my leader list. But yeah, definitely a lot of names that are this one. I don't know if I would say this is like it's definitely worth paying attention to. Definitely. So names that are just not breaking down the way everything else is 100%. So you got those names. And this is what we need to be doing, right? We need to be paying attention to the names that are just not getting crushed. That's essentially what it comes down to. The names that are just maybe moving sideways, that are basing or not getting crushed, that are showing that relative strength. That's very likely what's going to lead us into the next leaders in the market. But again, very good point. SAG kind of put this in there. This could all change. This could, as the market goes deeper and deeper, and if the market goes, I gotta stop. You guys know where my mind's at. It's messed up. I got to clear that out of my head. But you guys know where my mind's at in terms of if this goes into a correction. The names that maybe are performing the best right now might not hold up. So it's more of just being on a constant list that's getting updated every single week of what's leading, what's showing relative strength, so that when we do get the signals that there's institutional buying coming into the market, you then have that list ready to go and you know where those buy points are. And then that list of at the moment when those follow through days happen, what's showing the most relative strength is likely going to be the leaders. So, all right. I think that's all I got. I don't know if anybody has anything else. Look, keep it simple. Yeah, I'll do it this way. Keep it simple. Be patient. Just be patient. Trading in every market and trying to trade in every market is I'm going to just flat out say it's an amateur move that constantly gets reminded to people why the top traders don't do it. Yes, there's little pockets of relative strength. Yes, there is different short, long, there's so many ways to trade, and you can trade all markets. To me personally, that is a much, much more advanced approach to the market that takes a lot more years of experience. For the majority of people out there, your best bet is just sitting in cash, being patient, and being ready, because then when the next bull market comes around, you want to have a clear head and be ready to capitalize. And I think that's another thing that doesn't get kind of talked about enough is, sure, you may be flat or you may get a little bit out of the market in the approach that you're taking even if the market doesn't look good, you're trading these types of industries, whatever it may be, you may get something out of it. You may get a couple percent, right? Instead of sitting in cash. But the question really is, are you best positioned to take advantage in the next uptrend? And I think what I see happens a lot is, people, when they start over trading, it affects their trading, and sometimes they don't capitalize on the strong bull market uptrend as well if they were just kind of patient, clear-headed, and looking at everything from the sidelines with just an objective mentality. So, yeah, that is really all I got. Be patient, sit back, relax, keep an eye on what's given relative strength. Keep an eye on the rally days and follow through days. I've been doing my article every single week, so every single day of the week except Fridays. So you can check that out. If you're on YouTube and you're watching this, then Discord's where you're going to see it. If you're on X, I post it on X. Remember to buy on the fundamentals and technicals, but always sell on the technicals. Yes. So for me, being core CANSLIM trader, I do combine fundamentals and technicals. I will slightly ignore fundamentals only if relative strength, industry, and market are perfect, and it is a clear leader within the market, or it looks to be a clear leader within the market. That's the only time I will be more patient on the fundamental side, but then that becomes more of a swing trade. But traditionally, yeah, most of the time, unless it's something that screams relative strength, fundamentals, technicals, and yeah, you always sell on technicals. Don't worry about the fundamentals. I actually had this conversation recently with somebody that has been trading for kind of a decent amount of time, and they were talking about some names, and they were kind of downtrending, and they were like, well, blah, 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 their earnings, their sales, the company business. And I said flat out, I'm like, from a lot of teachings and a lot of books and education and just experience, sometimes those fundamentals are still surging higher, and that's where the stock tops. It's, you exactly like Zach said, you buy on technicals and fundamentals, but you sell on technicals. Fundamentals do not matter if that name starts breaking down. That's a big piece. Technicals trump all. The buying and selling. The stock market is just that. It's a market. It is buying and selling. The price of the stock does not go up if a company starts making more money. You do not get a percentage of that money because the company is more profitable. To be honest, what we're doing? We're taking pieces of paper with 3, 4, 2 character letters on it, and we're just trading it with each other. That's all we're doing. That's all it is. And that price goes up and down based on what other people want to buy and sell it for. That's all it really is. Yes, those fundamentals a lot of times are some of the catalysts behind people wanting to buy or people wanting to sell. But in the reality of it, the technicals show us what is happening, what is going on with supply and demand, who's winning, the bulls or the bears, are more people buying or more people selling, and what's happening within the supply and demand battle is really what's going on with the technicals. Again, that is what actually moves a stock price, not the fundamentals, not the news, not war. It's just buyers and sellers, and are there more buyers or are there more sellers? And that's what dictates what's going on with the price, plain and simple. And you could argue without me, but it's literally, that is a fact. It is a market. You can see it every single day, buying and selling. That's what control tells us what the price is worth. All right. That's all I got. Appreciate everybody. YouTube, you got that there. X, you got that there. Link in the description for YouTube. X, just give me a shout and a DM, and I'll shoot you the invite for the Discord. But yeah, no, I appreciate everybody. I appreciate all the support. And look forward to another week of trading, talking with everybody.